stocks. Now, this is pretty interesting. Despite that drought that's going on in South America, look at what the net production levels are. We've still got Argentina up 1.5 million tons, and we've got Brazil down 1.5. So net, they're still unchanged from a year ago. And again, it's acres. You know, we have definitely provided an incentive for the world farmer to continue to put resources into acreage. We've also domestically realized that we aren't going to be able to satisfy the bean balance sheet. We don't care to. We want to focus on corn. We'll let South America commit resources to the soybean complex. Argentina really has taken it to another level on corn as well, but in both countries have seen an obvious ramp up in production levels. So you can see, we lost 7 million tons this last year. They're so far unchanged on the year, which is pretty amazing. All right, I'm going to focus a little bit on the new crop situation. And I put this up, and I know no one is going to agree with any of these numbers, but I put it up there because this is kind of a market model. This is what the market is kind of penciling for values in the key growing areas of the corn belt. So if you just go with me on corn yields at 180 bushels an acre, new crop pricing in there, variable cost. Bottom line, rent. We won't get into that subject, but net gain of $172 an acre versus soybeans, a net loss of $20 an acre. So any way you want to look at it, there's $200 an acre difference when we project corn on corn versus beans on corn. So remember I said, or think about that balance sheet in the bean situation. We lost 2.5 million acres, lost 2 bushels per acre yield. This is what's amazing. Despite losing that, the market doesn't care. It's not even giving us a premium price to rebuild those stocks. We grew stocks off of less production last year. So you can see the market is just not putting the premium into beans at all. And that's probably the correct way of looking at it. Just to show I'm not cherry picking a single date and time, this is basically that last chart modeled over time. And you can see the bean situation has been below break even since early October this year. Corn continues to carry a significant premium, and again, rightfully so. Now this next chart I really like. It's really look at it as it's the corn line minus the bean line, but it shows it since 1999. So it's new crop profitability since 1999. What I love about this chart is that you can see it kind of ebbed and flowed from 99 up to 2005. But what did we start to see in 2006? We've talked about this a couple of times. We saw new crop, we saw domestic bean demand start to go down while we had domestic corn demand going through the roof. Not only that, we had world corn stocks really starting to shrink and draw down, and we had world bean stocks adding surpluses. So the market, another example, along with that export sales chart, the weekly one, another example of what price can do to, how efficient our market is in pricing things the way they should be. Corn has generally trended a lot, stronger premiums than beans over the last 5-6 years, and that's the way it should be. So we have to do some balance sheet projections, don't we? That's what we need to do in the market outlook meetings. So I want to just make the claim that the USDA is correct, and this 846 million bushel carryout or thereabouts is intact. Bring that into possibility for next year. Now with the profitability in corn, we still do have high prices, relatively high prices. 550-ish futures is still pretty high. My assumption, and this is probably me going out on a limb a little bit, I'm pretty bullish on planted acres. I've got 95 million acres. I'd be up about 3 million from a year ago. You put that with the 160 trend line yield. Now I want to make a comment on trend line yields. Today's projection for 2012's trend line yield is 160 bushel an acre. If I would have done 2012's projected trend line yield 2 years ago, it'd have been 170 bushel an acre. That's how much the last 2 years have affected trends in these projections. So we're talking about 160 bushel an acre. The problem with 170 is we've never seen 170, so it sounds unbelievable. We've seen 160 a few times. So that doesn't seem that far out of line. And if you're a believer, we've not seen in history where we've had 3 consecutive poor crops like this. There's not a lot of precedent set, but I think every year is kind of its own year, kind of like flipping a coin. You know, there's no trend necessarily. But bottom line, look at what happens. Take that 160 yield, and then look at what I've done to demand. That's maybe the most amazing thing. I raised demand 900 million bushels from a year ago. In other words, we're back to that 5.1 feed number we had 2 years ago. That may not even be realistic at all. But I put a full-fledged demand in there. I put exports back up to 1.9 billion, and I even increased ethanol up another 100 million bushels. And look at what happens. With that yield and that acre combination, you're still rebuilding corn stocks to 1.3 billion bushels. Now, we got used to, for a long period of time, talking about 1.7 to 2 billion bushels. That's the $2 kind of environment. This number, you know, at fall is a 4 number. Probably not a 499 number, probably a 400 number. But that's the kind of premium we're carrying in the market right now, heading into new crop. My alternative scenario is a 94 million acre and a 2% below trend yield of 155 bushels. Still, this is the key thing I want you to take away. I'm showing a 700 million bushel carryout, but I've got demand up that same 900 million bushels that we have this year. So again, you know, it's just tougher to project something that's going to be a tighter situation next year than it is this year without an absolutely terrible growing season. I did this presentation on Monday, and Elwin Taylor followed me, and he said, I don't know if there's any fans of his in here, but he said that there was a 60% chance of above trend yields and 40% chance of below trend yields. Now, I've never heard him have that narrow a range. Usually he's 90-10, but bottom line, I thought that was kind of an interesting comment from him. He's usually really one way or another. Bottom line, if you're a believer of tightening corn stocks next year, you have to be planning on a drought affecting a significant portion of the growing region in the U.S. this year. So it's back to those years where weather is our only real catalyst for higher prices. It's not demand, it's weather. We're back into that kind of situation. Again, with global tight corn stocks, I'm not talking about a $2 environment, but I am talking about, you know, we've seen 3 pretty recent. We've seen 3 2 times in the last 4 years. And you know, it's not that hard to say $4 is a pretty realistic projection based on something that looks like a trend type of situation.